mostly DYDX for any of these trades, so we can go there. But very easy to use. You're trading pretty much the current price, but you're not using the actual spot asset, which means that you're depositing USDC, and you're trading in USDC. All of your rewards will be in, either your losses or gains are paid in USDC. Even though you're trading, ETH or any market here, they have quite a few markets. You can switch by DeFi layer one. You can see that they have, a mix of the top, whatever, probably about 25 coins, something like that. But usually it's a pretty good place to start if you're looking to something for like a decentralized one. I don't do any of these centralized one platforms, but pretty much every platform has some sort of small spot perpetual market. So
So when you say
the
spot, let's
go for
explain
that.
what spot is.
Yeah, so spot just means that you're buying the underlying asset. So if you're buying gold, I think that's the best way to explain it. If you're buying gold, you're buying the actual physical pieces of gold. That would be considered spot gold. You have actual gold physical pieces. Something where you're buying a derivative of it is something where you're getting pretty much a piece of paper saying, I have gold, and someone stores it for you. You have no control over it. That's the similar method here, is when you're buying spot Ethereum, you own the actual Ethereum pieces. They go to your wallet. When you're trading a derivative, you're trading the price action, and you can trade upwards and downwards as well. So spot is generally, you can buy here, you can sell here, but there's no way to make the profit from here to back down unless you are shorting something on a perpetual market. You can just only wait on spot markets for this to get back to rebuy to then sell again up here. So essentially, they found make you able to trade on both sides of the flip, right? If that makes sense. So essentially, that's what's happening. I'm gonna do. I think we're live on Twitter and everything too, right? You said.
Yep, started us off
Cool.
here.
Let me just go retweet that. But for sure. So pretty much, essentially, what we're doing is we're looking at these markets on a derivative standpoint, and these are the methods of what we're looking for. We're going, if a short play would be from the top and down, you're making money while it goes down because you're essentially betting against other people who say the price are going up. So you're getting the money that they are losing. There's a couple of things you want to be paying attention to. Funding rate, positive means more people are long. Negative means more people are short. So every couple hours, when you have a long position, they'll show up here. It costs money to keep an open trade going every 8 hours, right? So depends on your platform. Also, I think this one's actually really short trading. It's like I think it's 40 minutes on funding, I believe. So really depends on the place that you're actually trading. They also have a couple of other things in here you want to look for. First of all, they have leverage. If you're starting to trade for your first time, I would avoid this. Um, you know, very much so avoid leverage trades. I don't think they're worth it.
So what
Something
is
leverage
leverage
trading
trading?
is you put in 1 ETH, and then you are able to maximize that to 20 times its current value. So if you're betting 1 ETH, you could actually have a pretty much like a bet or a trade that's valued of 20 times that value. So 1 ETH would get you 20 ETH worth of trade capital, pretty much, essentially. So when you do a large, so say we bought it right now, 1 ETH at 1696 for a long, essentially, right? What would happen is then we would have to then have it where if you go down below 1606, you would lose that entire Ethereum. But if you go up, you have the buying power of 20 Ethereum. So the actual multiplier on it goes very quickly, but it also is very risky trade. So this is something that you want to look for when you're a little bit more skilled on things. I think it's something that again I don't really mess with until you get a little bit later on. Um,
Yeah, the way
the other
I like to just explain it to people is you're going to the casino with a credit card,
Yeah,
right?
exactly.
It's
Not a
money
good
that you
choice
don't have.
unless yeah, exactly. It's like taking a small loan that can be, you know, yeah, exactly. Just instantly liquidate your money if it goes too low. Again, like anything over 5%, 5x is generally pretty risky. Legal limits in the U.S. I think are five on unless you're like an accredited investor or stuff like that. So, um, most of the markets that people are trading on, this one allows 20 just because it's not a U.S. market. Um, but yeah, there's also triggers. You can take profits. You can do sales. So once you're actually getting in that, if you go back to the other episodes, we always talk about these, structures. You have your stop losses in place. So we can talk about stop losses. We can talk about uh, TPs, take profits. Those are usually done in stages. So you also want to have these in mind, before you even get into a trade, right? So let's go back to some trading view stuff. That's just the general market here, but I'll talk about some stop losses and trades with some paper trading real quick since we don't have any active trades going. So essentially what we're looking for, let me turn on the paper trader. So we have, close this down here. And again, if anyone wants to ask questions or anything, feel free. I'm just kind of here explaining some stuff. We have our current chart. Why isn't it only showing? 1 second.
Yeah, you just have caverns.
Yeah. There we go. I meant to click the shrink, not the expand. All right, there we go. All right. So we have, I'm going to turn some of this other extra stuff on just so we see for right now. So essentially what we got going on here is we have our market, we kind of have our current overlay of ranges that we're looking to be interesting. If we're looking at a smaller, this is also on a very short time frame, 32 minute. This is when you're trading these types of things. We have, let me actually turn the caverns back on for just a sec. All right. So when we have a position going, you find your, what we've talked about since the first one, you have to find your specific set of rules that you want to look for, specific items that you
Do you want to
follow.
quickly
Yeah.
explain what a position even is for some people that may not know?
Yeah. So position is just choosing, to place either a buy or a sell at a specific price point. Like, so you're entering a trade pretty much, position, right? So, essentially you have to find your group of criteria that meets to enter a trade for you personally. But some of the things that you're looking for here, specifically on this chart here, we are going towards like a downward trend on RSI. So we talked about RSI in the first episode. Some of these things are kind of showing up. We've entered this top range here that's been hitting repetitively over and over and over, which looks to me showing like weakness against the support and resistance. So we talk about support and resistances. Support is something that your price action has more foundational level at specific price points, right? So if you on the movement up, we this becomes a support. These things, this line becomes a support because we've had a previous touch and we're moving with momentum. Whereas resistance is something that you hit over and over and over, and it's kind of like always like a constant battle, right? So constant battle of finding your supports and resistances and these things. And inside those lines of support and resistance opens up into a channel or like a trade channel or a range that people refer to as that. So this is kind of like a new range we've been forming. We've been here in February. This whole thing is just all the points of data have been through here, and then we get dips out, and then they kind of recover pretty quickly. We've seen this entire month, and we've seen trends of RSI go up, and then we've seen them go down here, and you can kind of see when they're trending downwards on the shorter time frame. This trend was like an exponential move, whereas this downtrend on RSI was very little lost. So to me, it looks like we're starting to actually get some decently good momentum on these trades in the short term. So this could be a small correction into, RSI is through here, but maybe the drop is only through like these ranges that we've already traded in a bunch back here, and then we can kind of expand into possibly hitting this one that we're looking at here. So while we're opening positions, we can have all these things is a relative, so we could pop into here, get some move. We'll get probably like a dip down. We'll start seeing stuff like this pattern show up. This is towards the end of the month. This is CPI data coming in. We'll get, some sell-offs around here. Depends on CPI data. This is like a turning point of, are we going up here? Are we going down here? But essentially what we're looking for is to find the current momentum through leverage trading or just spot trading. So again, my thought process here is we're moving downwards right now, for a small correction. And again, I don't think it's a large one. I think it's, we're still in that momentum trajectory of going a little bit upwards and then, kind of finding a crab and trade range, and then kind of the bigger RSI movements that we're about to hit, because this one's about to kind of like pinch together and the cavern's trying to close off. We'll start seeing some dropping through here once this actually happens really quickly, and then we'll start seeing some correction back into the range that we're at. Right. So what we can do here is create a new trade order. And this is essentially what you're doing when you're buying spots. So you're taking 10 units. You are going to be selling them on the trajectory downwards as this goes through here. If you're not using leverage, it's just the spot purchase. So 10 units, you're buying a market sell. And so we're going to be using 10 units of Ethereum. If this was 10x leverage, it would be 100 units, right? So that's how, shows you how much exponential you have right here. But you also want to set your take profits, your stop losses are important things here. Percentage wise, you can do, some people like to do like hard percentages. Some people like to do actual lines. I'll kind of show you what we'll do here. So we have stop loss set in it, and you could do the same thing on DYDX too. Again, I don't have any active money on there, so I've been more in the spot trades and NFT trading currently. But we have our stop loss is something you can switch. So I would do, if people are looking for upwards movement, your stop loss wants to be outside of ranges of people's, they're hunting for your money realistically on these things.
Yep. And so
When
this
you have,
position that you're going into, this is considered a short position, as you're kind of placing a bet, right, to say that this price is going to go down from here.
yeah, exactly. So I think on what I'm seeing in my charts, we're going to go be down in price over time, over the next, couple days or something like that, right? So what we're seeing here is I'm going to set my stop loss up a little bit higher out of side of wicks. I think we don't see these much, but you never know with volatility. It could just spike up and then come back down. Especially with crypto, it happens all the time. But this is something like, if it breaks out of this spot, I'm very comfortable with losing that, a little bit of percentage on it. I'm losing $530 on this trade, instead of not having a stop loss and losing, possibly $3,200. If that makes sense, right? So, if it kind of rips up, you want to have it out of ranges where you kind of expect it to trade, right? Like if you get an anomaly and you're actually wrong, which, generally if you're a good trader, I would say your win rate's probably like 60. So 40% of the time you're still wrong. So preserving capital is very important, especially if you're doing stuff like this. So if you don't want to be like near wicks, you want to give a little bit of a cushion, $20, $30 cushion just to, be there. But if we do break this with momentum, then I'm comfortable losing $530 as a bet that I made or a calculated risk that I made, instead of possibly losing a lot more, because this next trading window I think will split up into something between 1,700 and 2,000
Yep.
on
So
on the
so
higher
you're saying
side.
stop loss is essentially what it is. It's
Yeah,
stopping your
it's stopping
losses.
you. Yeah, it's stopping you from. Uh, it's preserving your capital. It's stopping you from making choices that are, more emotional. Like, this is a calculated. This is a 3.2% stop loss that I'm comfortable with. And what happens here is now we're going to be purchasing here. We can set our take profit. This gap here is a large gap that is probably going to get filled most likely because it didn't have a lot of volume traded here. We had some back through all through here, and it kind of popped up above that, if you can see that. So even though we've had all this trade all through here, it completely skipped that range on this movement up here. So generally, we'll probably, instead of this being the new low, like this will pop down, start being a new low support right here because we've had a lot of trades there recently. And I can see something like that. So what you want to do is you can have multiple take profits. I like to scale out 1/3 take profits. So like this is a short term trade. We have our first take profit. Whoops. So we bought 10 units. Our first take profit is 3. And then we're gonna have another take profit. Sell 3 more.
And
And
we're
we can
just
see
paper
that.
trading, guys. This is not
Yeah, this is
financial
just
advice right now.
Yeah, we're just showing people like what these actually mean and what people refer to when you're doing these things, because these are the kind of things that kind of help you be less emotional. And that's like really the whole point of this entire thing is all more so emotions. I personally feel like if you have a lot of emotions in trading, then you're most likely going to lose stuff. You're going to, not, you're going to delay on your stop losses. You're going to move them up, or, not, like, it's just so close. I really think it's going to, actually, I think we will be safer up here. Then you're going to lose extra money. Then you're going to revenge trade. All these things are, um, pretty common in the space. We see a lot of people do these things. So, realistically, what we're looking for is protect ourselves with a stop loss. So if we don't get too crazy out of the range, if we start getting away from this resistance hit over and over and over, that's usually a bullish sign, and that means that my trade that I have done here, I think is wrong, right? So the opposite of that is on the way down, most people are like, "Oh, this was my original idea to sell, but man, it's just ripping right now. I'm just going to hold all of it," right? So you start getting, it's all about that momentum here. People are like, "Oh, perfect. I've already made, a couple $100 right here. Let's keep it going. I'm not going to sell anything now. We'll check it a little bit." And then you see here, "Oh yeah, it's ripping down here," and then bam, like we start getting correction. People start panicking, and you sell everything. But realistically, if you had it here, you sold, the 3 prices you're selling at. One, this is the first, second, third take profits. So essentially, what's happening is you're getting you're exiting your position, and more positions. You usually get a better average price exit. So instead of selling everything here, if you're selling here, here, and here, your price average is probably something like 1606 instead of the 1635, which on the way down is going to net you less money, 35 $35 less, which would be, calculate out to probably, you lost out on 2%, if that's essentially what you're trading here, right? So, um, we can kind of see how these things kind of play out, but generally what I'll leave this. I usually like to leave everything up for the previous time so we can kind of go back and build on what we talked about the previous episode. As we're kind of learning these things, but essentially, when we're getting into them, we start to see whether or not this will be a good move. I don't know if it's going to be an idea. This is what if I was trading right now, this is what I'm looking for on these setups as stuff starts to kind of dwindle on our size because we already had this little peak here. Um, and again, these are something where we're kind of just you know it's all you want to be as third party and a observer as possible and remove yourself from the price action as much as possible realistically. One of my mentors pretty much said, like, generally try to trade assets that you have little emotion about, right? So if you are super, and that's why I think like something like trading NFTs, on these types of action or anything like that, people generally get like attached to the picture. They don't want to trade and sell them. We saw that. That's probably why one of the reasons they got so overbought and in the bull run of the NFT market, just because people get attached to them and they don't want to sell them, and then people get more when you can't buy something from somebody, they get more like angst or more emotional about that purchase. So we see them go up 150, 150 ETH, and then all the way back down to whatever 70. So you see these a lot of things get attachment to. So usually try and trade things that are less emotionally attached, or until you're able to formula, get your structure or get what you want your pattern of trade to be down. We've talked about a couple different things on that side of whether you want to be a long, short trader, you pullback trader, are you just a long term investor? You don't have trading for it. You don't like it. You day trader. You can you're able to stomach all the stress and craziness of day trading, especially in crypto because it's so volatile. So again, you have to kind of find out how you can use these tools to your own advantage more so than just letting people tell you, yeah, use this, use this, use this, use RSI, use this. Like some people, everyone trades differently. Everyone uses something a different tool, and you got to find the one thing that gets you your own advantage, right? So, um, any questions on that one?
I think it just comes down to understanding what type of trader that you are.
For sure. I mean, it definitely makes a big difference. People have our ability to stomach more risks. Some people are not able to handle it very much, and there's trading styles for all people, right? Like there's a lot of different things to do, and if you find out you're not much of a trader on these things, then investing and looking for good narratives might be your play, or there's a lot of different things that you can kind of look for sure. So essentially, this is what I'd be interested in going down from here. And then again, this is until how we talked about the last couple of weeks on the RSI. Essentially, this is what I'm looking at. It looks a little convoluted right now on these things, just because we're on the daily right now. Let me zoom out a tiny bit so you can see. But this kind of shows you how most of this momentum that we had from like the last couple days, like this is 7 days away, quite a bit. You can see how we've been trading in this since the beginning of January. This range has been pretty, pretty good range. Like it's been constantly just kind of up and down crab. Nothing a lot of serious. There's still not a lot of ton difference in volume on these things. But let's go to some of the other charts that we've been looking at recently, because I think some of them have been showing up some pretty good signs of strength personally. So, um, let's look here. Matic, I think, is one of the only ones that has shown to me to break out. Again, we've talked about it a couple times, but it's breaking out of the bearish downtrend structure, and you can kind of see it gave us a confirmation where the white is above the blue and the orange line here on RSI. To me, that shows that we got a little bit of bullish strength here. You can kind of see since this confirmation, the retracements have been practically zero. Very little. It's had like maybe like what 10% here. probably get back down to 34, a little bit of percent here, but I really think the overall structure of this is starting to look a lot more, um, you know, for the current time being and through the next month, probably continuation up to these ranges through here, high seven, 170, something like that. After we get a little bit of retracement, but that one is looking extremely positive to me. What was the other one we're looking at? Curve is also again extremely, you know, good on the daily here. We started to see that we came up, already had a little bit of a bounce, a little bit of a strength. This is again, I think we could get back down to at least about here, 104 in this range where the support is, just because again they kind of all follow the main coin. Bitcoin has been having a ridiculous movement up. We're actually getting some bounce. This is the first time that the daily RSI has been above the blue or the orange line. Sorry, let's see. Since May 2021, this is the first time this has shown a bounce on top of the orange. So again, if we get above that blue, similar idea, we can get continuation of these things pretty quickly. Um, we saw a massive flag breakout here. Again, this is still pretty low volume here, but I think once we get the retest and confirmation, which I think will probably bring us back down to like these areas, probably around these areas around here, 2000, 2200 or 22K, sorry. I definitely see it being a thing to kind of have over the next couple months be something that's got some legs. Any coins you want me to look at or anything like that?
Yeah, I mean, you saw stacks blow up last week.
Yeah. This was my previous chart on stacks. We saw that it was a little bit longer than I thought, but it looks like the whole news with all the Bitcoin ordinals and everything, I think really, really spiked the interest of stacks personally. So this was more of like not everything is trading analysis. You have to put in your fundamental analysis, what actually companies are actually doing. They can extend. You can see how on RSI, look how much has changed. This was when we first started talking about it. What was it like? I don't know, beginning of
Looks
January.
like it happened overnight.
Exactly. Look, it literally this went above the blue on in one day. Like this is a 1 day candle. Went to 76 or 84. 84 was the high. All the way back down. So again, if we can see this kind of, to me, this looks manipulated a little bit, slash possibly people bought up here and they're gonna dump a little bit. We could probably see some, pretty good resistance probably in this range. Let's go like back. Yeah, probably like here. 52 will probably be a good point to be interested. There's a lot of trade back here in July of 2022 around this price point. So again, we'll probably see this as kind of like resistance. We're already come almost tapped it. We hit 55, but once we start actually, after this looks again, this is like a little bit of a news volume. We'll kind of see this rest down, back down to around here. Probably touching the white with the blue, and the white would be a bullish sentiment move. But I definitely see something like this being pretty interesting. Stacks has a lot of momentum
That's
for it
that
with the ordinals.
PFP.
Yeah, you get your Bitcoin crash punk on there over there. I see. But they I think a lot of the narrative is right now is ordinals are super interesting. Everyone's trying to figure out what they are, go over to Bitcoin, mint stuff on ordinals, but they find out that, be honest, like Bitcoin is still extremely slow. It's still extremely high gas fees. There is no smart contract capability, so you're actually trading them. Usually, you're generally trading them on Ethereum or something else. If you're coming from that realm, you have to still have core knowledge of how to run, the actual core node, and to, command line to do the wallets with ordinal wallet. And so until that stuff gets a little bit easier, I think people are like, oh, what's this Bitcoin? What's this smart contract platform on Bitcoin? Like they're using Bitcoin. So I think that's kind of could be the next move, because obviously this was Also, if you can see this here, let me see if I can delete this for a second just to see the volume. Whoops. This was the second highest volume day ever
in history.
in history of stacks. So, and this was the pico top of the bull market. That the April May blow off top that we got. Um, that was the ultimate top, right? So, I mean, this is something where we're already down a bunch in terms of like percentage wise from the top. This is recovering really fast. So again, if this is something where you're looking at like this could be a strong play for the next market cycle, something like this, because people are looking for, there's always something that pumps, right? So DeFi was the one that pumped in 2018. NFT, 2018, 2019, really 2020 was all like DeFi pumps. Those coins that did well had the best rewards slash most utility, kind of did really well. When we saw stuff like NFTs kind of pump in 2021 to through the end of or the beginning of 2022. Again, we're getting a lot of down markets, but these are the times where you're looking for good use cases, altcoins that are down, still down tremendously from the top. I don't know about this one, but I'm sure it's down at least. What's the actual top? A good a lot, 80% down still, even though it's looks like it's recovered a lot, but realistically it's still down a ton on price. So these things are, interesting to kind of look for, um, and to be like long-term holds for the next market. I'm starting to look at stuff like Matic, Sushi, Uni. These things have cratered from their all-time high. We've gotten bases kind of form on them. And the next year is where you want to start collecting these things. Again, we got a lot of momentum coming in 2024, right? We got the halvening event in 2024 for Bitcoin. Ethereum has already had like technically it's like first halvening event with switching from proof of work to proof of stake. Those are a lot of supply strain on that
Deflationary, basically,
inflation.
right?
Yeah, essentially it's become slightly deflationary as we get more gas usage. It will become more deflationary, but yeah, essentially it went from producing what was it? I think we would have created roughly 2 million new Ethereum pieces since or tokens since the proof of stake switch, which was what like
A couple
October.
months back,
So
yeah.
yeah, not even that many months. So that's an additional multi-billion injection of coins that we don't have at all. So instead of that, we've lost I think 10,000 tokens total from the main supply. So again, that's a drop in the bucket in terms of like actual token wise, but that only adds more and more and more. Like this is the first time where there has been a deflationary mechanism. So we're kind of in new territory, I think, on Ethereum, especially for the current market sentiment, right? We get overall the macro of everything looks super insane. So let's look at like
Yeah, let's check out the
DXY
dollar, huh?
dollar. So again, we've had that. I mean, let's go like weekly on the dollar, right? So we got, these are from like 1980s. You can see what happened on our last time that we had. This is roughly like the last time that we had like super bad inflation, right? So I would look more to things like this to actually be structured, like how we're doing. And to me, this is the kind of the structure we're kind of seeing right here, right? We're
Man, that's a
getting this.
copy.
I mean, yeah, like kind of look. This is the last time that we had, rates in the eights and nines. Housing, costs like 15% to get a house loan for interest, which means it just shows this is a trend that was broken out of and looks like it's this was like a from 2001 top, it kind of broke through here, kind of came back through. So I definitely think this is something where this is almost used as support again here. and we can kind of see as the Jay Powell over here. Powell has been pretty signaling that we're not out of the woods yet. Inflation's still very high, but I
It did
definitely
go up.
see, yeah, exactly. Like the core rates are extremely high. They haven't gotten a handle on it yet. Overall, there is still correlation with your actual um, your dollars inverse. DXY is generally in with Bitcoin. We've seen this. If you look, this is since September of
I was
20
just gonna ask you that for
2022.
the audience.
Yeah,
Like when you say like reverse correlation, so
yeah.
you're saying when the dollar goes up, what happens to crypto?
When the dollar starts to go up, then the crypto usually goes down. So this has been a trend since what September of last year that we've kind of gone down. This is kind of we were really cavernous here, you can see, and now we're kind of pinching a little bit. We've had some reversal. This is on the weekly chart, so this is definitely
I don't
like
think
look at
they
the.
give you like too much time frames on the DXY.
I mean, you could use any time frame. I mean, with Trading View. What do you mean they don't give you too much? Or
Like as far as like the can you do minute charts on DXY?
yeah,
Oh, I didn't know that you could do that. I thought it was only like daily, weekly.
no, I mean you can do whatever with Trading View. If you have like the upper, if you pay for it, you get a lot. You can do custom time frames of anything, pretty much. But essentially, what I'm seeing here is we've had since 2021. You kind of seen this large upwards movement. A lot of toppy formations look like right here, but it looks like it's kind of all consolidated back in here. If we get a pinch up into here and a correction down, I could see these lows being hit. But again, I think this is overall like a little bit short term, downward pressure. I don't think we might not be done yet. This kind of looks like a. I mean, this is 2020 through now. Again, you're thinking on a different like we on these things we have decades worth of data versus crypto, which is max goes back to the 2009. So there's a lot more data to be gleaned from these things. Let's look at and that was a large top. I could definitely see it coming back to at least here with the correction, but overall, I still think something like that 80s type thing could be in play here just because of the current trajectory of inflation and our current issues. This is the last time we went off the gold standard. There's a lot of stuff that happened fundamentally here as well, and I think we're kind of in the similar situation now, right? So we've had this and massive amount of money being dumped into the system over these last couple years. This is since 20 this is the date. This is the date, right? Where is it? Let's see, 20 March 2020. This is like this top. We get this huge rounded experiences. We just pumped so much money into the economy. We're in a different kind of precedent, I would say, and it looks more like this thing. It was a big change here. We went off the gold standard. This could be something over. This was what 10-year period through here. Um, or a couple year period through here. I think we can definitely see something similar happen in this situation coming back up here with the dollar strength. So, if there's something, everyone's looking and being very, very bullish on everything, but realistically, I it's a shorter term play, looking for me just because of what we're kind of setting our economy up for. Debt is at an all time high. Um, not only our country, but most countries' debts are at all time highs. Consumer debt is at an all time high. The velocity of consumer debt is highest that it's ever been. There's
So are you saying that
a lot of factors
average
are at
person
play.
around the world is like not have extra money to spend in crypto? Is that kind of like what we're getting
Pretty
at
much, yeah.
here?
Like as you know, the price of eggs is correlated, right? You know, everyone's buying eggs for $12 a carton. Those add up really quickly. When you're expecting to pay, I mean, like 5.50, these things get out of hand pretty quickly when you're not really paying attention to how much your goods and services cost, and then people kind of shut down on those spending habits when they reach their credit limits and stuff like that. So then they kind of reevaluate and be like, "Wow, I didn't realize I was spending so much on all these things." So this is kind of like again, I think this kind of it got overheated, and we're getting some correction here. But until we start seeing kind of like a switch on JPal's side, and again, like there's no way we're not in a recession. They keep changing the data to say like, "Oh, we look good," or "This looks fine." But,
Didn't they go from core inflation to like super core inflation?
yeah, like they're changing their metrics for collection and stuff like that. So again, I don't think it looks super good. You know, we've been saying there's going to be a soft landing and all this stuff, and I don't think that's really in the cards realistically right now. But overall, I think we got maybe a couple months more of this kind of like euphoria kind of movement upwards, and trading wise. But yeah, essentially until this year we'll get some better buys, most likely in that like mid-summer range. Generally is generally a good time to buy. Just in general, if you buy in June and July, usually during the summer people are doing vacation stuff. You usually get better prices on the year average, right? So like if you're looking back multiple years, summers are generally something that where you can on the whole get better prices comparatively to May. Just look at every year of these things on crypto. September, like the beginning of that quarter, 2 and 3 are usually better buys compared to 1 and 4, personally. So, got any questions? Anything? This one's getting a little crazy on daily.
No, not that I see. There, we kind of lost the guy that was here, I think.
Nice. But yeah, I think this is probably a decent place to kind of wrap it up. If no one's got any questions or anything, we overall learned a couple little things of where to do trading at. You can find a couple, DYDX. There's GMX. There's for decentralized places. There's if you want to use layer twos. There's perp. There's perp.com, which is optimism. There is these are all like new newer platforms that popped up with the kind of L2 kind of blow up because each one has their own like decentralized trading platforms now. I think there's a couple of really cool
Are those
NFT
ones
ones.
that you have to like KYC to?
These are all just decentralized ones, so you just connect your wallet and deposit money, and
Okay.
then it's in. Yeah, these are all in like smart contract trading. Essentially, you're depositing your funds, similar to how like Blur works, where they have like a pooled fund, right? And that pooled fund is then divvied up into kind of like it's kind of like having a safe deposit box inside of a bank, or so your accounts on there and a sub account kind of. So there isn't without like any risk at all because you still have to kind of deposit your money to a entity essentially or a smart contract. Um, yeah, but yeah, it's definitely it makes it to where the fees are non-existent, trading back and forth, which is usually a good thing. I mean, besides like the actual platform fees, which are pretty low. But yeah, essentially, it makes it to where you're not doing a bunch of gas transactions, and transactions can actually go at like a very quick pace. Like you can set your buyer loss, like market buy very quickly. That's another thing we can talk about: limit buy versus like market buy. So say I wanted to go back to like the paper trading idea here. I want to buy some uni, but I don't want to buy it until we get back down to here. You can set that buy. This has 1 week. So if this comes down and drops into here, it's going to buy one. You can do this also, buy here, trade, buy. If it gets down even that low, I might have more risk tolerance because I think the price is going to do well. And then let's say, oh well, if it goes down here, it's really on sale. Um, I'm going to buy 15 of these things, right? So you can have it to where these things are already ready to go with a limit order. So whenever crosses this point, it fills. So that's another one to kind of have a little bit more. If you're a little bit more on the structured side, limit buys are always great. That's how I got a lot filled in the June July kind of time frame for me for Ethereum. Um,
Yeah, and those are, I mean, there's similar to the stop loss, but like reverse. This time you're just buying.
Exactly. Like you're not in the trade yet. You're essentially looking at spots of where you might think it could possibly go if you were on the side of wanting to pick up more. You do it at range bottoms, right? So this was uni, right? So again, if we say if we were up here and you're like, I want to get some buys in here. They had that bam, bam, bam. You had three purchases. You could have done similar setup up here, and then you get correction. Then you can look for like sell, sell, sell on the way up or something like that. So again, you want to get low purchasing points, bam, 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 and then wait for them to kind of correct. One of my favorite traders is Income Sharks on Twitter. He posts a lot of good stuff, but he's a really big, buy the blood and kind of just wait and hold type of guy. He bought $1,000 worth of Bitcoin every day from I can remember, like June, through November of last year or something like that. So he bought. Let's look on the prices of that. Like from he was buying some at the upper price tiers. I remember people kind of complaining about it, but you know 20 you probably started buying through from here all the way through December or something, $100 a day for 100 days or something like that. So again, every single one of his purchases is now up and above the current value, probably by I don't know, good 20%. So these things are all about that time frame, finding out how you can trade, and taking whether people say as with a grain of salt, finding out what works for you is very important. But if we don't have any other questions or anything like that, we can. You got anything for me? Risky.
No, I was just gonna say, yeah, those orders that you were just talking about, the limits, like, that's basically why we're educating everybody on charting, because those order limits, those are based on our charting, right?
Yeah.
So
All right.
based on the past history, what we understand, how we've seen the action moving in the different time frames with, the price arranged there. So you got your average cost, you see the caverns, you can see the RSI strength or weakness, and all those are playing factors into your limit orders here.
For sure. So yeah, there's a lot of different mechanisms on these things for sure. But again, it's something where it's all about that. The more trades that you make, realistically, the better off you're going to be. Right? You're going to fail a bunch. You're going to lose money. Just the name of the game until you find that system that really works for you. And that's why I say you're going to lose and you're going to fail. So choose to do something like paper trading or very low trading, low amount trading, or just
Only what you're
less
willing to lose.
exactly what you're willing to lose. But yeah, essentially, when you're first coming in there, what the first thing you do is the first time you do it is you're spot buying here because it looks like a good trade. You didn't put any limits. You could have got like lower prices. It's same thing with NFTs. Like everyone's just like people don't use bids or WETH offers a lot. People because they want it now more so, and it gets into that like cycle of you're not being the patient people in crypto are the people who generally win versus the people who are not generally the reactive traders or usually you want to again, you want to buy when everyone's down, not when everyone's up again. You know what I mean? Like it's essentially like again, it's cyclical. Like people are no one wanted to buy here at all.
It's emotions.
Everyone is we're going to zero. going to 10K, Bitcoin's dead, the biggest scam in history. 3AC, everyone's just been gambling. It's all fake. And then, from the bottom of here to here, and everyone's at 24,000 again. All you see is, holy shit, we're going to the fucking moon. We're going to 50. And then everyone sells. It's just that repetitive thing. Like every time you see that momentum, and again, where I think we're getting more towards a little bit more on that side of we need, I think, a little bit more of a correction before we can see these upper numbers. Like again, this is like I would say this is going to be like the roof. I've been saying we've getting some momentum upwards for a couple months since on our not financial advice um, trades with on Wednesdays. We've been talking about it. I'm kind of like the little bit of the macro guy. So if you ever want to do any spaces, Wednesdays at 8 p.m., we kind of talk about all markets, macro, economics. We talk about NFTs. We have a couple cool guests, but generally, we if you've been following those along, until a couple months ago, I've been pretty bearish. So again, overall, a little bit still bearish, but I definitely think that we're getting up. Just that this pump was not a lot of volume, but until we see until proven otherwise, and this is above this line, like on the couple of the other ones like Matic and everything like that, I'm still have my rules set and not trading them until these things are on the opposite side of them. Until we get some confirmations.
Definitely. And just wanted to touch on the trading vocabulary, the importance of that also, being able to communicate with other traders to learn, new things, new tactics, anything like you see on Twitter, you'll be able to understand what people are talking about a little more if you have more understanding of the vocabulary that they're using.
Yeah, for sure. Can definitely benefit.
So we'll always have more stuff, to educate everybody on, more terms, vocab, different indicators, different things that we see in the market as far as patterns, charting, etc. And not only there, but the macro, because we do pay attention to that. It has a very big impact on the economy here of crypto.
100%. Yeah, not paying. Living in the bubble of just crypto is pretty dangerous. It's something I have been caught up in before, where you don't look. 2018, 2019, it was something where I was not really paying attention to overall market structures and only looking at crypto, and that it was bad for me. I lost money on that one. So I started opening up through, especially with the whole change in like
But
2020.
could you say that it was bad for you? Because you did learn a lesson, didn't you?
Yeah, I lost how to learn 32 ETH really quickly.
But yeah, so that's what we take, and we move forward from it, take education, and
That's right.
take it from people like us that have lost money before too.
Yeah,
Nobody's
for
perfect in
sure.
this trading
But
world.
no, it is definitely a fickle mistress for sure. It's not an easy one to figure out. But again, it's something that I welcome anyone questions. Everyone, we're gonna do these on Mondays. More of I'd like to be more where people just ask me questions. I'm better about just like explaining ideas to what people have. I think more so than just kind of me rambling about what I see. I think if it's more structured on just people asking me questions like that, I usually think it's a little bit better. Um, probably get more value out of it just because anyone can think. But yeah, I think overall, we're just going to talk about each little thing each week that I kind of find as something valuable to kind of teach. Um, Again, so we'll be doing these Mondays, 1:30. Usually an hour long. If we get some good topics, we'll probably over a little bit, like last over 2 weeks ago. But yeah, generally it's going to be about keep it pack it to about an hour.
Absolutely. Wonderful time. Thank you for your time, Crypto Crier, and anybody in the audience that joins wants to ask questions later, feel free to comment. We're always around. Find us in
For sure.
Discord, Twitter, whatever you like, and we'll be around, and we'll see you next week.
Later.
Take it easy, guys.